little selling pressure here today. We'll see what happens. I don't know, maybe a little rally at the end of the day here. Can't tell you for sure, but certainly a little bit oversold. Could see a little bit of a bounce here, but the markets look like they're a little weak, a little trouble. We've seen interest rates up every day since the Fed cut. Okay. 10 years are now over 4%. Again, it's like a financial coup. Okay. That's seizing America. We're back with the Biden student debt, trying to pay those debts off. I mean, is anybody here in favor of paying off somebody else's student debt loans with your tax dollars? Again, we've got a huge jobs number on Friday, and who would like to bet that they revise it on the next jobs Friday? Okay, when does that fall? I think it falls just after the election. So, I mean, again, you got a market, but in the meantime, when you look at the bigger picture, what do we have here? We have a market that's stuck in consolidation. We have a tendency to get far too nervous about moves like 264 points in the NASDAQ. Well, if you break it down into a percentage move, it's just over 1%. What's the big deal? Okay. The Dow down 400. It's 1%. And I always ask, if you had a $10 stock that was down 10 cents, would you care? Would you make a big deal about it? And of course, the answer is no. I mean, but basically, markets are stuck in consolidation. Okay. Pretty simple. Now, the question is, will they break out of this? And the answer is yes, they will. The question is which way, and that we don't know. Okay. Again, you're down to what, 28 days or 29 days to the election. Typically, markets will run a little bit higher between now and the election, but they may not. Again, we don't have the answers. The only answer we have is to read the tape or to read the chart, same thing. Okay, read the footprint. And right now, we're just in consolidation. Okay, the last 3 days, the days have gotten a little bit wider. Okay, the swings have been a little bit deeper. But at the end of the day, we've gone nowhere. Okay, we're still stuck within that same range. I mean, the spiders have been around the 570 level, forever. And there you go. I mean, it's 567, but I mean, they've been in that same area. So we can't predict. I mean, look, I'm bearish generally right now. Okay. But if you told me I had to make a decision for the next 3 weeks, I'd probably have to be a buyer. If you told me it was the next 8 weeks, I might consider being a seller. But one thing you always want to remember is the prevailing trend is usually what rules. Okay. And so with absence of any decided direction, obviously the best trade sometimes is no trade, unless of course you're hedging. But the other side of the coin is that if you're going to get involved, you certainly have no reason to get short this market. Not that there's a reason to get long it either right now, based on where we are, but you certainly don't have, if you short this market right now, all you are is taking a guess that it's going to break to the downside. Does that make sense? So this is what we're looking at. Okay. Again, what I'm telling you to do is to stay on the sidelines. That's what I'm telling you to do. Again, if you're hedging, that's one thing. If you're investing, that's one thing. But if you're trading, there hasn't been a hell of a lot of trade unless you understand it and are willing to take the risk that goes along with it. Okay. But if you're investing or you're long-term trading, again, from a swing trading standpoint, I don't have a net direction right in the S&P, which is why we were flat. Okay. We do have a short position in the Dow because that was what was indicated by the footprint. But at the end, again, there's too many things going on. Okay. And the biggest thing, I'm going to ask a question to you. If I were looking at this chart, what would be my biggest concern of the action? What's my biggest indicator to look at right now? Anybody? Consolidation. Okay, that's a good answer. That's what I'm looking at. And then okay, if we say it's not necessarily number one, but it is part of it. The volume. Look at the volume. There is no action here. Okay. So you have a consolidating market with very little action. And especially when you look at this market, okay, here, you look at the VIX, which is exploding today. It's up, 15%. Okay. You look at the volume, which is non-existent. So why would I think that something is going to happen? I'm telling you, something big is going to happen. Okay. But I can't tell you which way, and I can't tell you when. Now, if I were going to try to time something, I would think that it'll be by Thursday or Friday. Why? Because Thursday and Friday, you've got CPI and PPI coming in. So those are logical times to figure this market might break out of this consolidation. It feels like things have topped. Well, I could kind of agree. I mean, if you haven't heard, I said that I'm looking for a 50 to 70% haircut to this market, but I didn't say when. Okay. But if I look at this, okay, it doesn't necessarily look like it topped. And I'm not saying you're wrong. Again, nobody really knows. It's purely speculation, but I certainly wouldn't get caught trying to sell up here right now. Okay. Neither do I. I know as much as you do. Okay. Again, when I may know more about trading, I may know more about the chart, but when it comes to where we're going to go from here, I have no reason other than a gut feeling that if I were to get short. And I've learned that trading off of gut feelings is not very good. Thank you, sir. The timing is almost impossible. That's my problem. Okay. If I could see, if you could give me a move in the indexes somewhat similar to this. Oh, here's one. If you can give me a move in the indexes somewhat similar to that, I'd be selling it. I wouldn't even care. I would be selling it. You give me something similar to this, I'd be selling it. I wouldn't even care. But when you're giving me this, I'm not interested right now. Does that make sense? Now, those two I showed you, I'm short both of those. Okay. Why? Because again, to me, those are reasonable shorts. I might lose, and I'm not going to be worried about losing. Okay. Because again, part of the business is not worrying about losing. And what did I say to you? We might have a little bit of a rally here at the end of the day. Look what happened. Look at them skyrocket here. Okay. Not skyrocket. I hate to use those terms because, I mean, we're up. The NASDAQ has rallied back, I don't know, 50, 60 points, 70 points. Consolidation, the longer consolidates, the bigger the move is going to be. And it would not surprise me, as I said, if it goes both ways. Okay. But we've got a lot of problems. Okay. Higher interest rates, 4%, over 4% for the 10-year, which was 3.3 when they cut the rates. So all that means is the banks are making a lot more money, and you and me, the average citizen, are getting screwed. That's all. I mean, again, you can believe me or not believe me, but has anybody had their interest rates lowered because the rate got cut? I would say probably not. What is your thoughts on the U.S. 10-year and the U.S. 20-year inverted yield curve reversion calling for a big market drawdown? Do I think they're going? I do think the markets are going way down. I think the inversion of the curve is certainly something nasty. It's been good for me because I've been putting money in CDs, waiting to invest it. And of course, it looks like we're popping up again. But again, there's too many things that people try to make their case, and then they give you the evidence that's going to make their case. I'm not a big fan of that. Okay. I think you have to make your case based on what you're watching. Okay. And that's what I think. Inversion is never good. When short-term rates are more expensive than long-term rates, which is what the inversion, the yield curve is supposed to go like this. Right now, the yield curve is more like this, or maybe even down a little bit. Okay, it was way down, but it has come back in line. But I think once you see these interest rates rally, you're going to see the same thing. So again, at the end of the day, it's too slow for me to want to get too overly involved. I think that's something that you have to take into consideration. The lack of activity in the market is a problem. And again, you have to be very careful. And those who trade me in the morning know that we're extremely cautious when we're trading. And today we made 1.5 trades, I'll call it 2 trades, okay, in an hour. That's not enough. That's telling you that there's not enough action in the market. And that's something that is curious. Okay. So I think you just have to be aware. Okay. But you've got Spirit Airline going bankrupt. They're still trying to put Trump in jail for January 6th, which, again, from my understanding, he had warned and told Nancy Pelosi to have National Guard there. And I'm not, again, look, I don't care which side you sit on. This is horseshit that they can go after a political opponent. And all they're really trying to do, they know they're never putting him in jail. They're just trying to bust him out of all his cash. So at the end of the day, it's pretty stupid when you watch it. And anybody who thinks it's okay should really go have your head examined, because you're as brainwashed as everybody else is in this country. Because the brainwashing in this country has been unbelievable. Okay, I've got a 29-year-old daughter who was in for the weekend, and she's more middle of the road like I am, but she was scared, and she started spewing off these stats. I said, I got to check your temperature, make sure you're still my daughter. But again, the brainwashing in the schools, the brainwashing by the news, not so good. In the meantime, there will be no notes tonight, okay, because Connie is not here, so I have no one to take notes. So there will be no notes. I'm sorry, but I don't have time to do them while I'm talking to all of you. So I will give you the levels, and if you want to write them down and have them, if you use the notes, then tonight, unfortunately, you're gonna have to do your own, because my note taker is not available today. Okay, so in the meantime, way too much nice for younger generation. Listen, they all get brainwashed, baby. They go colleges. I really respect Brian Hartline, who said what the Democrats were doing, because again, this is not for you. You're a little bit older than me. Okay, this is not the Democratic Party that we had when we were growing up. Okay, because again, they were much closer back in the days we were growing up. Okay, and the biggest difference was social issues. And from my point of view, social issues should not be a part of politics. It should be politics should be about defending and taking care of the country. But again, that's just me. Anyways, as we look, again, if you want notes, you're going to have to take them yourself, because I don't have any way to do them for you. The dollar continues to expand. Now, we don't trade it anymore, and I remind you that it's not because there's anything against the dollar. It's just that it's too expensive. We got to pay a fee to trade the dollar at 9x, and I'm not interested in paying a fee. Screw them. In the meantime, the dollar has exploded, and it's actually gone through our 102, which is our resistance. Okay, and again, I would think now that 102 would become support, and I think your next target is probably 103. So I would give you a 102 to 103. Okay. Hi, Bubba. I've started trading in 3 and 7 weeks and ago, and I've seen both equity curves go pretty much straight down, but not to seeing this is looking at historical records. I'm staying in it, but with what might be causing your experience? Well, I mean, you go through experience of drawdowns, and when markets get into a consolidation phase, you get sucked out of the premium. Okay, when you look at the product you're talking about, okay, which is the SPY, it's done nothing. Okay, so it just whipsaws around back and forth. You have no real trend, although we try to identify one. Okay. Thank you, my brother. Did you get my note? I sent you a note. I never heard back from you, but I appreciate it. I know I was counting you, but I was embarrassed to ask you because I hadn't seen you for a while. But that's all. Again, historically, it always works. The question is do you have the intestinal fortitude to stay with it? Oh, I didn't see an answer. Sorry, my brother. But anyways, so back to this, the euro currency, which we would be short, we were flat today. Okay, pretty much oversold, coming down to our level of 110. Okay, it's still 110 to 112. It's still 110 to 112. Okay, again, when markets consolidate, now this is not narrow. This is for example, this is a $2,500 swing from top to bottom. Okay, and if you base it on what the cost of the futures are, okay, so that would be something that is a little bit wider than you might think, right? Anyways, 110 to 112. The notes and bonds, we should be short, okay, but they're getting to a point where they're getting dramatically oversold. We were flat today. Again, they're breaking down. There's going to be a rally. I would predict that if they get down to 112, which I think is a support level, I would look for a rally. And this might be an opportunity for those of you to take a little chance. If you do, and again, if you don't make these trades, don't make them because I'm telling you right now, okay? But I would expect if we get down to 112 on the 10-year notes, there should be a little bit of a bounce. I think you're 112 to 114, and the market is extremely oversold, okay? So I would expect a little bit of a bounce. You can do it one of two ways. You can try to buy it and try to ride with the bounce and then look to sell it, or you can just wait till it rallies and sells it there. Either way is good. That is entirely up to how you feel about it. For me, I'll try to play both. Okay. But I'll end up net being short either way. Okay. But I will try to play the rally. But this is showing you, here is the date of the Fed rate cut. This has gone down every day since just about, and this goes inverse. So when this is going down, interest rates are going up. The bonds, again, same predicament. Okay. I think you're looking at probably 120 is an area I'd like to be a potential buyer for a trade. I still think they're going a lot lower. I think you're 120 to 125. Okay. And again, you can do the same philosophy stands here. Now, one thing that you can watch out for the bonds this week in the notes, there's a lot of Fed speak this week. There's a dramatic amount of Fed speak. And again, when they talk, the bond markets can move a little bit, which you can see today, what's going on. Bitcoin, which we were flat, whoops, sorry about that, which we were flat today, and we should have been short. But again, it looks like 60,000 became new support, which we talked about last week. I think we're still 60 to 68,000. 60 to 68,000. Okay. And gold, Golf Charlie, very much consolidating. Now, this is, I think somebody asked me, could it get back to 2,600? And I think it can. Okay. I'm not saying that it will. This is a very narrow consolidating market. We're short gold. Okay. And not, again, it's got everything to do with the way it's trading and where it's at. It figures to come down a little bit. Okay. But so in the meantime, I think you're looking at 2,600 to 2,700. Okay. And don't be surprised if it pops. And again, I'm not really looking to sell it. I'm looking to buy more gold, but I'm looking to buy more physical gold. Okay. The paper gold, I only trade. I don't own any of it. I don't have any paper gold in my profit sharing, my 401k, and anything. Okay. I'm a physical guy. Hold on one second. Okay. So again, I think you're 26 to 2,700. Now you could make a case for 2,650 if you want. Okay. And I have no problem with that. But again, one of the problems I have until this resolves out, I'm not looking to be an aggressive buyer here. I do believe there's a sell-off coming. Silver. Okay. We were flat. We should be long. But again, we are extremely overbought, which is one of the reasons we're not in it. I think you're looking at 31 to 33. And I fully expect to see silver get to, by the end of the year, I wouldn't be surprised if it got to 35. Okay. Platinum, which we don't trade. Again, you notice the consistency of things failing or coming back when they get to these overbought or oversold conditions. Does everybody recognize that? I mean, the Bollinger Bands, I don't normally use the Bollinger Bands. I use them to teach with. Okay. I mean, here's one of the charts I use when I'm actually live trading. There's nothing on there, just the chart. Okay. But it helps you teach because it helps you recognize when they're farther away. Okay. Did you get my answer on your options question, my friend? I'll get into it more tomorrow night, but did you get the general gist of what I said? Oh, I sent it back. I responded right away. Okay. Okay. Well, either way, I email, yeah. But I will address it tomorrow in more detail. I'm not a big fan of writing. Anyways, I think you're 960 to 1020 in platinum. Okay. Copper, okay, which we were flat today. We should still be long. And of course, copper rallied hard. We said last week that we'd like to be a potential seller, and I didn't sell it, but I would like to be. It just came down too fast. But really, you're consolidating. You're really stuck between 455 and 467. Okay, and this is actually kind of developing. You ever heard the term of a cup and handle pattern? Have you ever heard of that pattern? There's probably one of the most bullish patterns that there are. Okay. And again, this could be the cup. It could be. Okay. This could be the cup, and this could be the handle that's developing right now. Okay. And of course, it is only valuable when the markets are in a general uptrend, which, if you go back over a year, they are genuinely in an uptrend, even though we popped higher up here. Okay. The grain markets, they look great. Okay. Do you remember how I kept saying I wanted to buy grains? I want to buy grains. I want to buy grains. Even when we were short them, I said I'm going to put them in a separate account. They look great. Okay. The move in grains, was that what your question was referring to? I'll give you what the move is. It's actually the same as the S&P. It's $50 per penny, or $12.50 for every quarter cent. Okay. But in the meantime, when I was on air last week, I said, look for a sell-off in corn because we were overbought. Here we are. We came right back to the mean. So I can say fairly comfortably that 580 should be support. And right now, 620 should be resistance. And that's in wheat. Okay. We would be long, but we're flat. We're flat them all today. Corn, same thing. Became very overbought, came back. It looks like it found 420 as a support level. I would say you're 420 to 440. Okay. And soybeans, same thing, right back to the mean. So you can assume that about 1030 is about support, and it may go lower. Listen, this is not guaranteed. 1030 to 1080. Okay. These are not like, oh my God, you got to have these levels. Remember, anytime you get to a level, if you're trading off the levels I give you, which are pretty damn good, when they get there, you want to see the action when they get there. You don't want to just place an order, okay, and leave it lay there, because it also depends on the action when it gets there. Okay. Now, there are certain things that I will tell you straight out that, hey, I would be a buyer or a seller at this price no matter what. Okay. But this is not the case here. I want to see how it reacts when it hits that level. Well, I'm still fighting cattle. I'm still short. I still don't understand it. Okay. Now, we don't trade it anymore, but I'm short it and I cover it. I didn't think it'd get past 180, but I got about 12 more, about $1.20 before I get out. Okay. Or $12, so $11.70 to be exact, before I'll take myself out. But I don't understand it with the economy. I don't know who's buying it. But in the meantime, you can't fight the chart, although I am. I think you're looking at some resistance probably upwards around 190 now. Okay. And I think your support is around 186. Okay. 190, 186. Feeder cattle, which I don't trade, is now breaking out again. It did have about a 20% pullback. Okay. I can't do those until the second half, but I will be happy to do them. You have to remind me, because there'll be so many comments before that, but I will be happy to do so when I get there. Zoom is a natural because I do that anyways. PayPal is the one you'll have to remind me on. Okay. In the meantime, if you trade this, I think 244 to 252. Hogs, I think I've been long hogs and they've been very good. It's okay. I think you're going to see a little bit of a pullback. I would be looking to be a buyer now at about 78 cents, or $78, whatever you want to call it. It is cents, but about 78. Okay. I don't think we're going to get much past 81, although I think we will eventually. Okay. But not now. And of course, I could be wrong, but I'm going to be ready to take off my longs. And I don't know that I'll get short, but I will be looking to be a rebuyer. Natural gas has had a nice run, but of course it got very overbought. And to no surprise, it did come back a little bit. Now we are supposed to be long. We were flat. And again, I think that you're looking at support, which is the same as last week, 260. And I think it's 260 to $3. Okay. Which is what we were watching. Okay. 260 to $3. Crude. Now this is the conundrum that I can't get to. I would love to sell it, but it's not giving me enough volume on the blow off. Okay. So I have to wait. I need a move up that's got volume that's, let's say, up above here. Okay. Oops. I don't want to do that. I'm going to do it. Control Z. Does that get me back? No, it doesn't do it either. Yeah. What did I do here? What did I do to my charts here? There we go. Okay. Let me do this. There we go. Okay. So where am I? Crew. I gotta go back to crew. There we are. Okay. So I need the volume to pop up here. That's what I'm looking for. I need a little bit more volume to oh, thank you. I need a little bit more volume, but it certainly is looking like a sell. It is certainly dramatically overbought. Okay. But again, I'm not going to tell it when it's through. The market will tell me when it's through. Okay. In the meantime, there's an outside chance this is going to reach 80. I mean, it's going up in leaps and bounds. I think you're 72 to 80, believe it or not. Okay. Now, once it finds a level or a top that you can see, then I would look to short it. Now, when I mean that is like if I turn this down into a shorter time frame, and that's up to you. The shorter the time frame, like if I took it down to 4 minutes, okay, I could have sold anywhere along here. But again, normally against a daily chart, you probably want to use 15 minutes, and you might have sold it here and here. Again, I didn't make the trade, so I don't like to discuss trades I don't make, but you need a secondary, or what I call a trigger time frame. First, the long-term time frame, whatever that happens to be, identifies the trade you're looking for, and the short time frame gives you the idea. Now, normally on a 60-minute, I mean on an hour, on a daily, the right chart would probably be 45 minutes to an hour. Okay, and again, you probably would have sold it right in here. Okay, if you traded it. And again, like I said, I didn't make the trade, so I can't really comment on it. But I would. But you remember, the longer the time frame you're using, the more risk you have to expose yourself to as well. In the softs, do you put any weight into harmonic time frames? No, I don't even know what they are. How's that? What are they? Tell me what they are, and then I'll tell you. You remember, I was a floor trader. Okay. Well, every chart has to be divisible into 60. Okay. But yeah, I was a floor trader. I didn't have any charts. I didn't know from all this stuff. Okay. I had to read it. Okay. That could be okay. The 4 hour and daily, that could be okay. Again, it's really up to you as an individual. There is no right or wrong answer to the time frame that you want to use. What the right answer is what's comfortable for you. Okay. So the wider the time frames you use for both long and short, all that means you have to take a little bit more risk. Okay. But that's fine. It has to fit your schedule as well. Okay. In the softs, we don't trade them anymore, but cocoa, we would be short, and the level would be 65 to 80. Cotton, we would be long. We'd still be at 70 to 75, which we've been stuck on. Again, this looks like it's getting ready to break out. Now, remember, I am not encouraging anybody to trade the soft commodities because they're a little snarky. Okay, it's like a country club there, even though it's electronic, number one. Number two, okay, they trade at odd hours. And number three, if you don't know what you're doing, you can get your ass handed to you. Okay, but I do give you the levels. Cotton 70, 75. Sugar, which we would be long, just consolidating between 22 and 24. Coffee, which we would be long, it just got clobbered. That might have been changing, but in the meantime, I think it's 245 to 270. And OJ, which we would be short. Okay. Again, everything is just in consolidation, consolidation is a position that all markets spend about 65% of their time trading in a consolidating fashion. Okay. Which makes it the most painful and the hardest to trade, which is why typically, depending on the type of trader you are, you try to stay out of consolidating periods, unless you're trading the consolidation rim. Okay. But overall, consolidation is very painful, as many recognize. Okay. And lumber, I didn't give you levels there, Kenny. Sorry. $4.60 to $5. And lumber, which, we don't trade lumber. You cannot trade lumber. It is not liquid enough. Okay. You'll get murdered. But the only reason I do look at it is kind of a a way to maybe get a gauge on the economy. And this hasn't really shown us much of anything. Okay. But what I could say here is somebody wants to make a case for a cup and handle here. This would be different because this is more in a downtrend than copper. Okay. So again, it's still very quiet. It's still very hard to get overly aggressive into this market. I'm warning you now, and I will again remind you later. This is not a market that you want to get overly aggressive. You want to pick your spots. You want to find your trades, and don't try to get too many because it will create trouble for you.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.